BFSI webinar series. We have a large audience today from different parts of the country and a few from overseas as well. The participants are from the senior management, finance and compliance functions and represent a wide range of listed and private companies. I take this opportunity to acknowledge our event partner, Blossom Advisors and Consultants Private Limited. We appreciate their support in organizing this webinar. Blossom Advisors is a 5-year young boutique debt syndication firm based in Mumbai with focus on supply chain and structured trade finance. It is run by financial professionals with a principle of deep roots, strong branches. Before I introduce the topic and speaker for today, I will hand over the podium to Mr. Shashi Bhushan, CEO of the Way to Wealth Group, to say a few words. Shashi. Yeah, if you could just unmute yourself, Shashi. Yes.
Thanks, Shantanu. Good evening and a warm welcome to all of you. Thanks for allocating your precious time for this event. I heartily welcome and also thank Mr. Arunachalam for being here and to conduct this session for us. As to the program, there were a few questions as to why BFSI and why the series. So that reminded me of a famous statement which was made by my Chief Compliance Officer a few years back. When it comes to knowledge, there are three things. Things which we know. The second one is that which we think we don't know. And the third one is a very interesting one, which we don't know that we don't know. So it means a lot, right? So there are a lot of things in this world which we actually do not even know that we are ignorant of. So that triggered off this series, and we thought it would be a good idea to help unravel the lot of inner details of these things which we normally don't give attention to, and we wish and hope this series will bring in a lot of debate discussion amongst all of you and make you participate in the coming series as well. The sessions which will be after this in the coming weeks would be on debt markets, credit insurance, life insurance, and critically so in these days, the cyber security and cyber reliability insurance. Thanks once again. Shantanu, over to you to take things forward and to formally introduce Mr. Arunachalam to the forum.
We have a very informative presentation lined up this evening. So while the director and officer's insurance policy has been in vogue for several decades now, especially in Western markets, the increasingly strict compliance and regulatory environment has brought this insurance policy into greater focus now. Even so, the information about the nuances of the policy and accommodating specific industry-related exposures is not very widespread. So the aim of today's webinar is to highlight some of these aspects in more detail. It's my great pleasure to introduce today's speaker, Mr. T.L. Arunachalam, Director, Global Strategy and Special Projects, Head, Liability and Cyber Practice, Bharat Reinsurance Brokers Limited. Mr. Arunachalam is a seasoned insurance professional with over 3 decades of experience in both Indian and global markets. He began his career with New India Assurance and served in various capacities there for over a decade. After privatization of the Indian insurance industry, he moved to IFCO Tokyo, where he headed the Japanese and Korean business unit, Delhi NCR commercial business, and Chennai operations. He then served as Executive Vice President in Monarch Insurance Company, Philippines. Arunachalam returned to India in 2010 and has since then been a whole-time director and a core team member at Bharat Reinsurance Brokers. His areas of expertise include liability and marine, where he has structured very unique covers and handle complex claims for prestigious corporate clients. He's a very, very well-regarded practitioner within the insurance ecosystem, both in India and outside. Mr. Arunachalam is a postgraduate, a qualified lawyer, associate of the Insurance Institute of India, and a certified Six Sigma Green Belt holder from BIS. Ladies and gentlemen, we will have a Q&A session at the end of the presentation. So please feel free to post your queries via the chat window during the presentation itself, and we'll try and take up as many as possible, time permitting. Can we have the presentation on the screen, please? Over to you, Mr. Arunachalam.
Thank you, Mr. Shashi, and thank you, Shantanu, for this great opportunity to talk to the invited participants. I'm very happy to be here, and it's a very good effort on the part of Way2Wealth and Bloom Advisors to share with the markets that you're addressing very critical areas of business. So the focus of what you want to do and what we are already doing is to make sure that business entities, the corporates and the promoters have their risk properly addressed. It may not be possible to 100% protect the organization from the vagaries of business, vagaries of nature, and the environment that might change as you see it today. But what can be done best is to pay closer attention to risk management, closer attention to risk evaluation, and to the maximum extent possible, where insurers are happy to underwrite the risk, to transfer the whole risk to the insurance program. So from that angle, I'm very happy that we have taken up this topic of directors and officers liability. It's a topic which most corporates are already taking a serious look, but possibly discussions like this will help them to appreciate certain other perspectives of what they might have missed. And for those who have not paid serious attention to it, possibly these discussions and this presentation could be giving them thought about why they should look at executive or management liability as a matter of risk management for the entity. Beyond that, for risk management for the individual directors and officers. So I'm happy to be sharing these thoughts and experiences with this group. So good afternoon to all the participants who have come here. Can we move to the next slide? So I'll take about 15 to 20 minutes to share with you these contents of these slides, and maybe some part of the explanation about some of the cases that have happened. We'll discuss case studies to make it interesting. And as Shantanu mentioned, a question answer at the end of the session. Feel free to ask your questions to the best of my experience and whatever I've learned handling clients, actual client situations, I'll be able to respond. We'll talk about why within the insurance program of corporates, where does D&O liability fit? Why should corporates should take a look at it? And what could be the features and structure of a typical D&O liability insurance? As you know, every insurance policy is customized. Even a motor car policy can be customized. Definitely policies taken by business entities are always customized. So where D&O liability insurance is to be customized based on the risk exposure and the risk profile of the corporate. Some key considerations of how the policy is structured with the inputs from brokers and with clear understanding of the customer, because they are the ones spending money to buy this protection. And definitely to the extent insurance companies are happy to be underwriting this risk. And finally, we'll look at some case studies also. Next, please. Kaushal, are you sharing screen?
Yes, screen is on.
Yes, Arunachalam, we are on
okay.
requirement here. Yeah.
Yeah. So the risk profile of entities would include typically risk faced by the operations, the property and related risk of running a business. Definitely a businessman would look at the connected risk, which could be Forex or trade credit or any other risk. What is catching the attention of most corporates world over is liability risk that typically the entity would face, and also liability risk for individuals who run the operations of the business. So the risk profile, the risk environment is changing very fast. What we are seeing very common today has not been so prevalent 10 years ago or 2 decades ago or 3 decades ago, has not been such a priority. Today, it's becoming a serious priority. We see that liability environment is changing. That means more people tend to approach court of law. The legal environment is changing. The courts, both the bar and bench, are more informed than before, and the required level of sophistication has come in most countries. Of course, it was always there in the Western economies, but definitely the Asian economies are catching up in paying closer attention to the liability obligations of contracting parties, and where somebody fails, then to pursue the indemnity requirement, indemnity that's possible. So within the liability portfolio, the liability faced by the organization from a, let's say, an accident, industrial accident, as you would have seen, a lot of fire and explosions are taking place in industries, gas leak or environmental damage is taking place. So that's a different host of liability situation that might come. Cyber is another major concern for business people, and definitely in mid-size and large corporates, it's a boardroom topic. Professionals who are offering services should be insuring themselves against any legal liability arising out of a negligence or an error, which might come up in the delivery of services. They would look at a professional indemnity insurance. In that slew of products, directors and officers liability is a very key coverage that entities are looking at. The first level of clarity in directors and officers liability is this policy is not intended to protect the entity itself directly. The prime purpose of this policy, the raison d'etre of this policy, is to protect the interest of the individual director, individual officer. When I say directors and officers, it covers the directors on the board, independent directors, executive directors, non-executive directors, officers, those who are having a supervisory or managerial role. In some of the insurance companies' case, they would cover every employee of the organization against this. The question is, why should directors be protected? From what they should be protected? In the discharge of their official function, directors take decisions or don't take decisions. There are acts or omissions which are inadvertent and innocent omissions. They may take a decision not to do certain things by which somebody could be aggrieved. This happens every day, world over, every business entity, this could happen. Whether we are going to invest in a new project, whether we are going to invest money in a new instrument, whether we are going to set up a plant in a new location, whether we are going to launch a new product, whether we are going to retain or fire an employee, whether a person has to be transferred or kept in a place, whether there has been a problem faced by the employees in the organization because of which management is responsible. There could be any number of circumstances or situations because of which somebody could be aggrieved. And the whole burden of what has happened, that the grievance of the individual, the whole burden might land on the individuals who took the decision or who didn't take the decision. Frequently, the MD or CEO or the director of finance or the director of operations could be a project head, anybody. So what can trigger action on the individual could be a legal notice, or can be a summons from a court, or can be a plaint received from, or even an email or a letter sent by the person seeking redressal, seeking compensation. And if he felt that indemnity is to be given to its completeness, there may be a demand for indemnity for what they are feeling aggrieved about. So in a typical day, corporates would face this. When I look at newspapers, maybe I read 2 or 3 newspapers online and offline. Every day I look for these happenings, these events, these occurrences, where I see a possible dispute, something brewing. My mind would automatically think, in the background, there is a director or officer or somebody responsible in the organization who's going to be hauled up, who may be blamed. These days, there can be action, there can be some kind of a trigger, even based on an allegation. It may not be an actual event. If it happens in a significantly dramatic manner, to the extent you see a big pollution event, or you see a gas leak, or a big fire happening, or a big failure of a company, or issues about default on bank loans, newspapers scream about it. You get to know. But when I see something dispute, some letters or some emails flowing across between organizations, my mind automatically feels there is somebody who's going to face, who's going to be at the receiving end of this process. And I'm naturally worried, has his company procured a directors and officers liability insurance cover so that this person can be indemnified? You can't prevent somebody from suing you. You can't prevent how he wants to do it. It's not in your control. What you can do is be protected by a responsible insurance cover. So the focus is, the intention and purpose of directors and officers liability is to protect the individual. So from where the threat will come, I'll come in a different slide. Now, what can happen is, if the legal process initiates, there is a court hearing, there's a trial. At the end of the trial, if there is a award given against the director, then he has to compensate, he has to pay the amount that is awarded to the other side. There may be appeals, of course. The Indian system would permit few more years, but at the end of the whole process, there is going to be a financial outcome which is going to be very severe on the director. So in my mind, the actual benefit, the utility, the purpose of D&O is to protect the individual director or officer. Their personal fortunes cannot be impacted or harmed. As you would know, in civil law, even if a person dies, this law can further proceed against the estate. So the legal heir, the spouse, the dependent, who are protectors of the wealth or the saving or the property of the director, they will be deprived of this fortune. So the person would have worked all his life to create this personal wealth. It can be hampered, it can be eroded if there is a successful award, which finally, after all the appeals have been passed, and he could not be protected, then these personal fortunes can be impacted. So I would think the utility of this is to protect the organization. Then the question is, whose job is to buy this cover? As it has happened world over, there was a time when individual directors used to buy this cover for themselves, but for decades now, it is the normal behavior. It is seen to be the responsibility and obligation of the entity to cover their directors and officers, because it is believed that a person, when he discharges his work in the official sphere, he does it for the organization. So it is usually seen the organization buys this cover for the directors to protect them. As I would like to tell you, nobody needs to be named. It is not a named cover. It's a cover which covers all the directors without having to be named. Anyway, in the underwriting process, the insurance company would look at who are the directors, who are the investors, who are the stakeholders, and what is the past history to the extent they can find out. It is part of the underwriting. So the policy will simply say ABC company is insuring their directors and officers, and there are several components or features of this policy. So the practical happening of corporates and what the directors or officers are going through is the backdrop of what D&O liability insurance is and what gives it the relevance. You looked at a major event. There was a major gas leak recently in India, and in the process, within a few weeks, the relevant legal authorities, the regulators, imposed a huge fine. This happens frequently. Every time a major incident happens, if it's a regulated entity, then there's action taken by the regulator to bring to justice the organization which they think is responsible. Maybe it's only an allegation. Maybe it is not so punishable against the organization, but still that's a course. That's the empowerment given to regulators and authorities. So there may be a severe impact on organizations if such grand events happen. We have seen that even during COVID times, quite severe incidents have happened, like major ransomware attack on a large IT major. Who expected it? It was a severe event. There's a huge expense the organization has met. And you have seen investments flowing around. A large entity was able to get investors across the world into their entity in India. There is a major investment M&A activity which is going on, inviting investment into India. Every such process, and on the background are multiple legal agreements and contracts, and then indemnities and warranties and promises given. If those indemnities and warranties and promises are not kept by circumstances or by intention, there's going to be a dispute. In every such happening or occurrence, there's going to be somebody who's going to face the heat, who's going to be acted upon. There could be legal action on them. And if it's going to name them as individuals by name, then definitely a D&O policy should have been there. That will kick in to start addressing the expenses and costs, and finally the award. That's the relevance and purpose of D&O cover. Next. I'm not able to see the presentation on screen. Shantanu, can you tell me which screen, which slide we are on?
Yeah, we are on the director and management liability slide.
Yeah. So I've told you the purpose and the background of D&O cover, and that we have to protect the fortunes of or the savings or the assets of the individual directors, and it's usually seen as an obligation of the company they work for or they're part of to make sure the directors have to be protected. There could be civil or criminal action. There sometimes law provides, even in company law or any other legislation, there are violations which are listed in the legislation which are civil in nature, where ultimately if it is proved after investigation, there is a fine, or there may be a civil action on the entity or the director. The same statute or legislation can have penal provisions which are criminal in nature, where any continued violation or breach would invite fine in terms of rupee or imprisonment or both. So they could be criminal in nature. The moot question is, would the D&O cover also protect the director against any action from a criminal point of view? Usually, most insurance policies, I would think all insurance policies would not protect if somebody is convicted of a criminal offense. Insurance would not step in to offer a protection. But having said that, D&O insurance, the prime purpose, much like any other liability insurance, the prime purpose is not just waiting for the event to happen or whether there was actually culpability on the person, responsible on the person for having done or not done. These days, what is really frightful is allegation. Then allegation that there is pollution, you polluted the land, water, and environment, people got sick because of your effluents, could be an allegation. Financial misdemeanor can be an allegation, it may not be actual. Diversification of funds can be an allegation, or intentional malfeasance, intentional acts can be allegations. Sexual harassment allegations. So there can be just allegations. End of it, if the director is innocent, he will go to any extent using competent lawyers to prove that he didn't do any wrongdoing. Just because insurance is there, he's not going to admit that he has done it. He will anyway fight. So the insurance company and the lawyer appointed, mutually agreed by the director and the entity and the insurer is going to fight tooth and nail to prove that these are mere allegations. So the allegation, to protect oneself from allegations also would cost money. You will engage competent lawyers depending on the level of the challenge. You will engage lawyers who are competent to appear on your behalf and prove that these are mere allegations. So competent lawyers don't come cheap. There is a cost, sometimes a huge cost involved, even in proving that you didn't do anything wrong, not waiting for an award to come against you. So these policies are very important because they would pay for the legal representation and defense cost if there is an allegation and you are fighting to prove yourself to be not culpable and not wrong. So I would see the first level, not the only benefit, the first level benefit one has to understand. This policy pays for the defense cost, and it's going to be very useful to have an insurance company join you in that process. If there has been a actual wrongdoing or a wrongful act which was unintentional, which was never in the motive of the person, but it happened, it came out to be true, then there may be a mutual settlement between the claimant and the person defending, of course involving the insurance company. If there is a settlement which is also confirmed by a court of law that the settlement can be accepted, then even settlement is something that the process, the policy will recognize, not having to fight for years and years. If there is a factual correctness in the happening and there is some kind of justification in seeking indemnity, then the insurance also provides for settlement, of course involving the insurance company and the insurance surveyor to be a part of that discussion process, and finally offering the settlement to the claimant. And you can see that increasingly in India, corporates do face these kind of challenges, mostly reported in the news media. all the corporate incidents, all the boardroom disputes, somebody being brought into a board, somebody being removed from a board, then investments given and a lot of disputes, an appointment of somebody as a chairman, removal of the same person from the position of chairman. All of this are usually going to end up in disputes for the rightness or otherwise of those acts. And we are seeing this activism, judicial activism, that there are competent law colleges producing very high caliber lawyers. There are centers of excellence. There are competent law firms to take up these cases. And the new generation of judges having grown up in this kind of environment and now being a highly connected and informed world, everybody is able to access credible documentation, credible information worldwide to make up their mind whether an particular act is to be blamed on an individual, whether he was culpable, and whether there is an indemnity to be provided and what kind of indemnity is to be provided. It is not as difficult as it would have been 20 years or 30 years ago. So in this kind of environment, it is all the more necessary for directors to be protected from surprises as they do, as they smoothly function as a MD or CEO or director or even as an independent director. Coming to independent directors, all of us would have seen the way companies law has evolved, growing compulsion. Law provides that at least 50% of the board has to be made up of independent directors, and independent directors are from different backgrounds. They bring with them their experience and their stature and their knowledge so that they can contribute. They are not just brought in without reason. And when they come in and participate, today law considers that if you have been an independent director, you have participated in meetings, even an electronic meeting, you have been informed of where the company is going and what the company is doing in the form of board notes. And then finally, you have provided your consent by signing the board resolutions in consenting, then you are part of the decision. So if there is a blame that is going to come on individuals, it is not just the executive directors, it is not just the CXO, even the independent directors are vulnerable for this kind of challenges. A couple of cases we have seen the entire board has been accused, they've been brought into defense. There are cases, even criminal action has been initiated against the entire boards in some private companies for possibly an action of the person at the helm. But because law recognizes, as you can see, the 2019 amendment even allows the Serious Fraud Investigation Office to pursue any financial misdemeanor, and there is no limit. The limit is unlimited as per law, even against an independent director. So that's going to be a serious issue if the graver the loss, and if there is a public angle to it, and an institution like SFIO is coming in, then the liability exposure to directors, particularly independent directors, is quite severe, which is why anybody who is coming into investment, I know a case, a very small startup company, which started with a capital of 2 to 3 crores, and then in a matter of 1.5 years, they've grown in valuation. So they invited a very well-known brand to be one of their early investors. So I had advised the startup company about what kind of insurance they should take at what point of time of their business growth. And D&O is something that I already told them, that when you are going to expand your company and you'll have directors on board, including independent directors, this must be a cover, or this must be an exposure you should look at. Then they asked for presentation, they asked for quotation, everything was given. That CFO made not a 3 a.m. call, but a 7 p.m. call saying, we need this D&O cover right now, this evening. So I told him, where is the big hurry? Because we've been discussing it for a few months now. Then he said, no, sir, tomorrow morning, the investment is to hit our account. But the investor told that unless you share the D&O policy copy or proof that you have paid premium for it, the investment is not going to come. So sometimes it can be so critical that an investor coming in who is going to nominate a director to the board gives it that kind of a priority and sensitivity that unless there is a D&O insurance cover, we are not going to invest, and my representative is not going to come on board. That's the kind of priority independent directors have been given. And it is the obligation of business entities to take this risk exposure with the due priority and sensitivity, and with the help of advisors and brokers like us. They must evaluate the cost requirement. They must reevaluate the limits that they should buy, and also the other parameters of how they will conclude this policy. Next. Now, who can act against a director? From where the source of legal threat will come could be many. As you can see from the slide, it could be a shareholder, retail shareholder who may be aggrieved on many counts. We are seeing more instances, especially in the Western world, that individual shareholders are aggrieved that because of a mistake or an error or a bad decision, the company's valuation is affected. The company faced rough weather in its financial journey, and because of that erosion of value, the investor feels, I made a mistake investing. It is because of the mistake of or error of the people in management that the share price has come down. So there is something called class action suit, when a set number of individuals can get together and through a council, one council, they can file a case where the event is the same, and the people are affected uniformly by the same cause. Law permits, even in India, that people can file a class action suit where a bunch of people who are aggrieved may act against a director. It will be quite severe if such an incident happens. So shareholders can be a source of threat. Employees, because of, more instances, people have seen with interest what is happening. There is a sexual harassment allegation, can be a media house, can be an IT company, can be a manufacturing company. We have seen from the media as many instances where female employees have alleged there has been a misconduct on the part of another employee, somebody in their own level or somebody senior, that they exploited their position and then they made advances which are unsuitable, breaching their modesty. Or there are other cases where somebody received a punishment transfer, a promotion denied, or benefits not given. Employee related cases can be there. And thirdly, government and regulators. As I mentioned earlier, corporate events would invite scrutiny and closer inspection by governments. Every large event that you would see, there is a government department or regulator. In some instances, I've seen multiple agencies. You have the local police filing FIR, you have CBI filing FIR, you have ED coming in, then you have SFIO coming in. Multiple agencies would come in to investigate. It may end up in dismissal of all those cases. Courts may decide there is nothing wrong, the person is innocent, but still one has to go through the trauma of those investigations. Nothing can be done about the bad feeling one may get, but something can be done about the financial cost of what is happening by carefully selected D&O cover, in which the legal representation cost, the defense cost, and if the case is actually filed, the cost incurred for paying a lawyer can be easily met, provided sufficient limits are taken. So governments and authorities are a major threat. Customers, your competitors and vendors, they are also a source of threat for individual. Suppose a customer feels that because of your supply of a product or service, they had to face a loss. There was a difficulty they faced. They were investigated. They had to face action by their customers or even a government where they are serving. Today, it's a globally connected world. So a customer can file a case. Logically, a customer in those circumstances should sue only the entity, logically so. But there can be cases a customer may sue an individual by name. So a D&O cover would expect a legal action on a director or officer by name. If there is a legal action only on the company, D&O policy normally would not respond, except those circumstances where it is a employee related. The policy can be extended to cover even the entity, or it can be a securities or shares related circumstance where the policy can be extended even to protect the entity. Barring those two situations, the policy is to protect only the individual officer. So in those circumstances, I would think even a customer or a competitor can sue because of unfair trade practice or unfair competition or some fraudulent practice one is alleged to have followed, and that can be an allegation a competitor would want to bring forth. And there are government entities like Competition Commission or any other entity which may be playing a regulatory role. They may come in to investigate. Again, investigation cost is going to be there. Vendors and contractors also can be a source that you offered a sale contract to somebody who was not entitled, he was not the L1, or his quality is not as per the contract specifications. So somebody who lost the business also can come in and allege that that decision was based on ulterior motives or for a wrongful consideration. So the source of threat because of which the director or officer may face legal action or a legal threat or initiation of a legal process can be multivarious. And I would think today corporate should protect their directors and officers from any of these surprises. I have a couple of case studies where the Ministry of Corporate Affairs or the ROC initiated action on the directors. Usually these notices are issued in the name of the director, mentioning his DIN number and mentioning his home address. Is going to get quite personal for the individual. If if it is allegation, you are able to prove yourself that you didn't do it, well and good. There's not going to be legal award, and there may be cost. So I'm sure that with these sources of threat that are being there, an entity should definitely feel responsible that they should protect their directors and officers and employees from these kind of legal exposures. Next slide, please. So a D&O cover would definitely step forward to respond if any of these circumstances come. That there is a letter or an email or a communication from any of these sources. That's the starting point of action in a D&O cover to initiate a claim process. Then that has to be immediately informed to the insurance company, and together they devise what kind of strategy to be followed, whether it should be defended, is there a truth to it, is it factual, should it be settled early enough, or should it be fought in a court of law, is a process in which the customer, the policy holding entity, the director concerned, and the insurance company, and if there is a lawyer or a surveyor involved, since he is an essential intermediary, they also have to be involved. That strategy has to be taken. So a D&O policy would step in if there's an actual wrongful act which resulted innocently or inadvertently, or there is only an allegation that such a thing happened, and the entity and the director want to contest it. They want to defend, saying it's only an allegation, there's no fact behind it. The policy will definitely step forward and indemnify for both the legal awards, if it is passed by a court of law or a legal body, or the legal cost within the sum insured that you have chosen to represent yourself, either before an investigation agency or before a court of law, and to pay the lawyers who are going to represent you. Next, please. Typically, what a D&O policy would expect is a wrongful act. This is defined in different policy wordings in a slightly different way. A typically wrongful act is an action or a lack of action, an omission, by which somebody was aggrieved, or by which there was a breach of a legal provision, or by which there was a financial loss or any other harm or hurt which resulted to a third party, and that third party decides to initiate an action. So what is to be noted is it can be a allegation or an actual event which is an action that you decided to invest, you decided to buy, you decided to award a contract, or you decided to invest in a new facility, you decided to transfer a person, you decided to travel with somebody in a lift, and then there is an allegation of sexual harassment, all of this. Or it can be a omission that you did not invest in a right product, you did not invest in profitable instruments because of which the company lost money, you did not make a proper deal that the company could not expand their business, you did not provide benefits to an employee who was deserving it. It can be an action or omission relating to whatever business activity is there, including matters relating to employment, matters relating to company operations, matters relating to your treasury or your share issuance or share purchase or investment related actions, and definitely employment related issue that may be coming. Misstatements, examples are misstatements in your statutory filings. Every month you file returns before your regulators or government authorities or even tax authorities. Anything that you have done which has been either a conscious or innocent mistake because of which the authority wants to take action on you is a classic example. false declarations in statutory filing that if there is a corporate action involving your company, if you're a listed company, then the stock exchanges, SEBI rules require that you inform the stock exchanges, maybe a new CEO joining or a new event that had happened, even a major accident that happened, which can hamper the operations of the company, is to be reported to the stock exchange. If there is something incorrect, if there is something not factual, if there is something false which has crept in, and you had already filed that, that can be a serious action against the people who are key management personnel or those who are responsible for filing those returns. Sexual harassment is most interesting for lay readers. Not that anybody enjoys reading it, but we are seeing more and more instances of people in organizations who are blamed for it. Even there may be issues like other than sexual harassment. I know a case where a major IT company in US, Indian IT company, was sued because in a video call, most of the employees on the Indian side and some of the employees on the US side spoke in Hindi. So the native employee there whose mother tongue and operational language is English felt aggrieved that I'm being discriminated against because the language of communication, business communication, was something deliberately not followed. I didn't know the language spoken by them, but they were discussing official matters. I'm being discriminated. So there can be any kind of, I won't use the word funny, but any kind of new situation which can be a legal threat or exposure for a director. So I would wish that we can learn from our own experiences, what is happening around us because of our actions or inactions. We can also learn from what other individuals or other entities are going through, which obviously we are able to see from media, credible newspapers that publish those stories. And of course, the global connected electronic media is even faster to bring to you things happening as they are happening in real time. So we'll be able to learn from what is happening to people around us, not that it's going to happen, and learn from that and to take a correct decision. Is it going to happen to me? Am I going to bear that risk on my own shoulders? Or am I going to responsibly transfer it to an insurance policy? What kind of premium budget I'm able to afford at this stage of where I am in my business? And how to structure this? Am I going to take professional help or I'm going to do it myself? All these decisions can be taken if you look around, be alert, and then learn from what's happening to our environment. Next slide, please. Next slide. The three phases. The salient features of a typical D&O cover is prima facie. This policy, as I told you, is to protect the director, which means the individual director or officer or employee. As I told you, the wordings of insurance policies followed by various insurers may have subtle difference, but largely it will cover all the directors without having to be listed on the policy itself. It is not a named cover. All the officers without having to show their list, like in a medical insurance, you don't have to name them. And in some of the policy wordings, even any employee, anybody who's an employee who may be brought to task by an outsider blaming responsibility is going to be covered for whatever is the action or inaction on their, which is blamed on them. The policy will trigger. And usually for their claims, there is no self-bearing deductible. Usually insurance policies will have a self-bearing portion. Even in your auto car, your motor car policy may have a 1,500 or a 2,500 rupee amount in each claim that you will bear. Likewise, most insurance policies will have a self-bearing portion, which is called a deductible or excess, depending on which country you are in. If it's a claim impacting only the director, this policy has no deductible, which is to be borne by them. But if it's going to be an employment-related or a shares-related claim, and the claim is to be indemnified to the entity, there is going to be a deductible. And if it's going to be a share-related, the deductible is going to be slightly higher. So what we need to understand is that there are three sides of coverage. One is the directors himself. The second is the entities. And third is, of course, entities, but the claims arising out of your treasury or shares-related disputes. These are the three phases, three components, or three features of a D&O cover. Next slide, please. Usually, any policy, whether it's a D&O insurance or a public liability insurance or any of the policies, the policy is as good as how it is structured. Usually, for the sake of understanding, I'm able to share this. Usually insurance policy will have three components, three aspects that you should look out. One is the schedule itself, which will show your company's name, the limits of sum insured that you've taken, and the policy period, the premium that you're paid. All of this is recorded in a schedule, which is a 1 or 2 or 3 page tabulated format. The second component is the policy contract wording, which is a maybe, depending on the company, maybe a 10, 20 page document, which is a contract wording. That's the second feature that defines everything about the policy, about who is the director, who is an officer, who is insured, who is an insured person, what is loss, what is damage. All of this is defined in the policy in alphabetical order, A to Z. You'll be able to see how these aspects are defined in the policy. The third component is what kind of add-on covers are there. Today, a good D&O cover is defined by all this, how correctly your schedule has been drafted, what kind of policy form that you have followed, and thirdly, what kind of add-on covers are brought into the policy. It is the responsibility of an insurance broker like me to guide you and a customer to correctly appreciate as this add-on covers is relevant for us. And very importantly, for the insurance company to make those add-on covers part of the policy. As I mentioned, employment practices liability and employment securities related liability, which is protecting the entity, are add-on covers. They are not by default part of the insurance cover. It is to be chosen. Some of these add-on covers seem to be very interesting and very essential. For example, what I've not shown here is even a director who has been on the board for one term is protected till his lifetime. He was director on your board only for once, maybe for a period of 2 years or 3 years, and then he retired. But there may be an allegation which happened during his time. There may be a legal action. As I told you, in Indian context, a legal case may be running for 20 years, 30 years. So today a D&O policy can cover that director, subject to the policy being renewed by the company year after year. That director or any director who retired will be insured till his lifetime. Till he dies, he is protected, which is a very, very good development as to how the product evolved. And again, another interesting add-on is covering the spouses. As I told you, civil law will chase director's legal liability even after he dies. His estate is exposed. That's how the law operates worldwide. Today, in a directors and officers cover, you can include the liability that might attach to spouse, agents, official liquidators, even live-in partners. Surprisingly, at least one policy form I've seen, live-in partners are also part of the coverage, that if there is some culpability attached to them, and it is possibly arising out of their action or their influence on the director, even they are covered under the policy. It's a laundry list of about 20, 30, 35 different add-on covers, and time won't permit me to cover all that. But we should remember that a good D&O cover is as good as the add-on covers that go into them. Next slide, please. As you would know, I'm not going to delve deep in this. As you would know, most of the insurance covers, insurance policies worldwide would have exclusions. I'm going to explain just 1 or 2 of them. You can see prior and pending litigation. If there's already litigation that is pending against the company occurring before the policy was taken, this policy will not pay for it. For anything that's happening after the policy is taken, this policy will pay. There's also something called retroactive date. You start taking the policy, keep renewing it year after year. The policy will cover all acts that happened from the date you took the policy for the first time. So you took the policy in the year 2015. You had 5 renewals. We are in 2020. Anything that has happened in 2016, 17, 18 is covered under this policy, provided you are continuously renewed without break, provided you have kept the sum insured uniform and adequate. To the extent sum insured is there, this policy will cover even for something that happened earlier, that was never discovered, never challenged by somebody. They choose to challenge for that particular action in the current year. In 2020, somebody sends a legal notice alleging something happening in 2018. This policy will cover that with the feature called retroactive date. Secondly, I'm going to cover only one more exclusion. It's a long list. Maybe another session could be useful. Major shareholder exclusion. Because this policy is to pay for third parties claiming against the director. But if somebody was being a major investor in the company, there is a major shareholder, if he wants to take legal action on the director, this policy wouldn't pay, because the assumption is a major shareholder is likely to have some kind of influence or actual voting right or board representation, because of which this could have been averted. So by being a major shareholder, by having control on the board, it was possible for you to have averted this. You were part of the decision because you were on the same board in which these decisions were taken. You are aware of what's going on in the company. A major shareholder will not be able to claim. That major shareholder threshold is usually varying depending on the policy, depending on the insurer, depending on the customer. By default, it is about 15%. Possibly by negotiation, it can be increased to 20, 25, sometimes I've seen even 30 or 35%. Likewise, there are as many add-on exclusions that are there in the policy. A good understanding of the policy will not just stop with understanding what is covered. It should also touch upon what is not covered. Next slide, please. Next slide, please. Yeah, next slide. So typically the underwriting consideration would be, you have to choose about what kind of sum insured you want to choose. Would you want to buy 1 crore, 5 crore, $1 million, $5 million, depending on the size of your operation? Are you a multinational? Is there a foreign investor in your company? Are you having businesses, activities, products distributed abroad? There are a whole set of considerations by which you will decide, number one, to take this policy. Number two, what kind of sum insured, which is called as limit of indemnity under the policy, you will decide. And the features with the help of advisors, Shantanu or anybody who's advising you will be able to advise how to structure the policy. For the insurance company, these are the parameters. What is the profile of a company? Are you a company which is in India, operating only in India, having customers only in India? Or you're a company with 5 subsidiaries outside India, you have manufacturing in Brazil and Mexico and Czechoslovakia, you have a US market. Is your profile like that? Then the insurance company decides to price the risk and offer you cover, and also decide to provide as many add-on covers. So there are a host of underwriting parameters which an insurance company would follow, and based on which they will offer their terms. The market is quite big. In India, there are about 37 or 38 insurers. Not all of them have this product, but I would say half the number would have a well-defined D&O cover. Not all of them are very happy to insure every other organization. Like we can choose an insurer, they'll also choose which customer they want underwrite. So it's a very harmonious, transparent, open communication process by which your risk is properly presented to the insurer by your broker, and the insurer transparently tells what he is going to cover or not cover by following these parameters. And it's not a very elaborate and time-consuming exercise. It will be by looking at an annual report and doing a research on Google. Mostly underwriters will be able to see who you are and how they want to offer cover. Next slide, please. Next slide. I would like to touch upon certain actual case studies. Can we go ahead to the case studies, Kaushal, so that we are able to discuss what happened to corporates? Yeah. So this is one of the most famous today. Everybody has green memories of what happened. Large scale misappropriation or diversion of funds, with the methodology of massive fudging of corporate accounts, maybe involving certain individuals, and being a listed company and having exposure to international markets. What happened? I'm not naming them, but everybody who reads this will know. But this is not the only case. You would have seen from the year 2017, 18 or 19 or right now, so many cases where Indian corporates have faced this kind of situations. Maybe responsibility is foisted on a small set of people, maybe one person whom the country would like to see the name every day in the paper, or it may be a coalition among people, or it may be an allegation, we do not know. But these events are happening. You would have seen a dozen or more $1 billion in India, $1 billion worth of this kind of allegations. And who is in the forefront of being responsible are financial institutions. So you would see banks fighting to recover money, corporates fighting to survive because of this major event, their business is affected. They're not operating the way they used to operate. The promoter is gone, and employees are suffering. Maybe employees are on the streets. So massive jolt the corporate would have faced. But events like this are typical case studies where on the background, there may be a D&O cover that will be there, which is triggered. The company would have informed the D&O underwriter, but these are the cases that have come, and how do we protect? Particularly the protection for the directors, independent directors, because they are not the owners of the company, but they are there to provide guidance. They are there to provide governance requirements and ethical requirements for the organization. They are there to provide knowledge and experience inputs to the organization. But even if they are innocent, because having participated in discussions and meetings, they may be exposed. Can we go to the next slide, please? This is a case which we have handled. Accounts of 2013, 12-13 were taken up in 2017-18, and then letter comes from the MCA charging them on 20 counts. Some of them very significant. Some of them as light as you should have printed your returns on single page. You printed on both pages. Also was a mistake pointed out. And in this particular case, the mistake was they did not remit the PF collected from employees. It was an audit point. Their auditor was a key, well-known auditor in India. They recorded this in the annual report. Even a small 3 or 4 lakh rupees of water tax not paid was also recorded, and many other deviations. So in this case, the matter had been reported to the insurer. But what happened in this case was, it's a very interesting case. The customer did buy D&O insurance, but they failed to inform the insurer. It happened, the first notice came in 2017. They never thought they should inform D&O insurer. They never thought that the linkage between this notice and a D&O cover. They never even informed their own insurance advisor. And 2 years passed when all this was happening. The insurance company took a position that if you had received a communication like this, which is blaming you for certain mistakes, then you should have informed us. 2 or 3 renewals went. When we asked you a question, are you aware of any facts or circumstances which may give rise to a claim under a D&O cover? You had mentioned in the proposal form as no or not applicable. You left it blank. So the insurance company took a position that we will not be able to step forward. Anything that is coming up new, please do inform us, and we will be able to step in, and the policy will trigger. Next, please. This again is another textile sector, a very interesting case. This company put up their products online for online sale, and they suddenly received a notice from one of the state government weights and measures department that in the product displayed in one of the screens, MRP is not displayed. Is a charge. I checked up the e-commerce sites of other e-commerce companies. I found that MRP is mentioned in the last payment page. It is not mentioned in the product display page. Where you search for a product, you say red color shirt. In that particular page where 10 different types of checks and stripes and plain red color shirts appear, MRP is not mentioned. But it is a decision of this regulator, this government authority, that you never displayed MRP, so we are charging a fine. So this was duly informed to the D&O underwriter. There was a D&O policy in place. It was, I think, a 4 lakh or a 5 lakh fine that was imposed, and the insurance company did pay for this fine. So there are, like in a motor car or a fire claim, the insurance company will first want to see whether the claim is admissible. Is there a legal liability on the director? Number 2, what kind of amount is being levied? What kind of amount is being demanded? Is it justified? And is it within their norms to pay it? In this case, they paid off the full fine. They reimbursed the insured for the full fine, the compounding fee that was charged. Next, please. There are as many such situations. I just captured some of them here. You know, pollution incidents happening, largest pollution incident where a factory was shut down, huge NPA or diversion of funds for which big names, people with famous personalities are chased and their entities are suffering. Employees in thousands are suffering because of that. Boardroom tussles you have seen, I don't have to name it. There are any number of entities where you have seen boardroom tussle, investors fighting with each other, and there could be allegations behind all this. And abroad, you've seen Western market being very active in litigation. There are thousands and thousands of cases being filed, which have a D&O angle to it. Even during COVID times, we have seen very interesting cases which have come up. One interesting case is Inovio Pharmaceutical, the last but one. Pharmaceutical company made an announcement that they have a COVID vaccine, and the share price in US market, which was about $4.6, started going up. And then in about 1 week's time, the MD of this company appeared in a public media press conference along with President Trump, in which this was discussed. Still the same stand was maintained. There's going to be vaccine to be announced. Suddenly an investors activist group just put out a tweet saying that there's no vaccine in this company. They are not going to announce a vaccine. And shortly after that, the company also announced that we don't have a vaccine as of now. It's going to take a few more months, maybe till January 2021. By this time, the share price went to 19 point something dollars. And once this tweet came from the investors activist group, the share price fell and back to $4 something. Whoever invested in that interim period at a higher share price, they've all got together. There are multiple class action suits coming on the MD of the company and the entity also. It's a very interesting COVID times case. So we should realize that during COVID, it is not a threat to our business because we are forced to shut down our business and face business losses. There are accidents happening in factories because they are restarting. Some maintenance was not done. There is a fire accident or a gas leak or explosion happening. There is also a D&O or a liability related exposure that corporates are facing. So I would think today it is worthwhile for a businessman, worthwhile for an entity, worthwhile for a decision maker in a corporate to take D&O exposure seriously and talk to their broker about this. There are good insurers in India with good capacity, possibly about $30 million, about 220 crores or 230 crores, easily to be offered for this kind of cover in India. It is very much insurable. It is very useful. From the case studies we have seen, actual cases that I have handled personally, me and my colleagues, they do respond when that situation comes. So I would think D&O is needs to be a hot topic, and it needs to be a priority for the boardroom. Shantanu, my presentation is done. Any questions?
Thank you, Arunachalam. Very, very useful presentation.
I'm sorry I breezed by a few minutes. I can take a few questions.
Oh, you're almost exactly on time. Not a problem. So, Arunachalam, we have a few questions. I will mention the participant name and then put that to you. I'll try and club the questions together based on the topics. All right. So, so one of the first questions is from Mr. Sundar S. He basically wants to know if you have an MNC based outside India.
Yeah.
Can the corporate take a D&O policy at the group level to include the Indian subsidiaries, or should this policy be taken only in India?
Yeah, if there is a subsidiary of an MNC operating in India, the usual methodology followed is the parent company in the parent country has a master policy, which is usually placed by their broker, and it is structured based on the parameters available in that country. Why I'm saying this is the way D&O policy is structured in India is much different from the way it is structured in many other countries. So the parent company buys the master policy covering the headquarters and all the companies worldwide. And there are countries where it is mandatory for a local subsidiary to buy a cover in that local country. There are markets where it is not mandatory. The insurance jargon used there is admitted or not admitted. Depending upon it is an admitted country or a not admitted country, the broker can advise in which countries you essentially need a policy locally, or you can take a policy in the headquarters covering the local subsidiary. But India is an admitted country where the property insurance, marine cargo insurance, and most of the operational covers mandatorily have to be taken in India. But the normal approach taken by multinationals is to buy a small limit local cover. Maybe a crore in some cases, maybe $1 million. So the parent company will have policy for, let's say, $10 million or $50 million, depending on the size of the company. And the local subsidiary in India will buy a small local policy. Maybe it could be as small as 1 crore. I've seen frequently $1 million, typically 1 million euro or $1 million. Usually this 1 million euro or $1 million is a deductible under the parent policy. The master policy is for $50 million. It has a $1 million deductible. To comply with the local regulation, to make sure there is a local policy operating to provide for unforeseen circumstances, the local policy usually is taken for the deductible amount of the master policy. Hope that answers the question.
Thanks, Arunachalam. Next, there are some questions on the sum insured or the adequacy policy. So there are questions from Mr. Vignesh Chandrasekhar and Mr. Sachin Bora.
Yeah.
Basically, how do you arrive at an appropriate sum insured? Okay. Because typically directors would want a higher quantum, whereas a company wants to keep the quantum limited and therefore save on the premium. So how does one arrive at an optimal sum insured level?
Yeah. So there's no chart or there's no table in which you can link the business size of the company, maybe the volume of investment or the turnover of the company, and link it to the sum insured that you buy. Usually, I have not seen much of relativity. I would see that, are you in a sector where this kind of happenings are frequent? There may be corporate challenges. Are you in a sector which is quite exposed to such challenges? Number one, to the extent it is relevant. Number two, I have seen, what is your own experience? Did you receive notices from government? For example, a customer who has faced a 2 crore legal notice from a competitor against naming a particular MD or CEO, that becomes a benchmark for me. Somebody received a notice for, let's say, $1 million from an entity, because these policies have a worldwide operation. These policies can be taken to provide worldwide territory, which means wherever you are doing business worldwide, this policy will cover as issued in India. And it will have a worldwide jurisdiction, which means wherever in the world a legal case is filed in a court locally, this policy can respond. With that kind of a wide possibility of coverage, then we must be prepared for that kind of challenge. So if I'm an Indian company having, let's say, a UK subsidiary, then I should definitely, the benchmark there would be at least £1 million pounds sterling, or in Europe could be at least €1 million. There may be a benchmark available, but I have never seen a linkage between my sales turnover or value of my assets and the sum insured. But I've seen a frequent normal thinking process for decision makers is how much do I budget for this? I have a peer in the company. I spoke to another CFO, a similar organization. He says, I am spending about 3 lakhs on a D&O cover. So I'd like to look at that kind of limit, because I don't have an experience. Nothing wrong happened. I want to make sure that there is a coverage available. So I'll buy a policy, whatever 3 lakhs would get. Frequently a wrong approach, because suddenly you buy a policy for, it's like cutting your leg for the shoe. You don't do that. So I would learn as to what happened to me, what kind of legal challenge, what is the value of a legal challenge I faced, can be one parameter. What is the value of a legal challenge faced by an organization who is my peer, or another CFO, another MD, another chairman? What kind of financial value of a claim against him? How much was that? Usually, these are the factors that are considered. But in the Indian context, I would say an Indian SME would buy a policy at least for 1 to 5 crores. A mid-cap company would buy at least for between 5 to 10, 20 crores. A mid-sized bank or a NBFC would buy anywhere between 25 to 100 crores. Then a large Indian entity or a large Indian entity which has exposure abroad, they distribute products. They distribute sensitive products like pharmaceuticals and drugs or automobiles. There can be a sudden backlash of a legal challenge on them. They want to be prepared. So a $50 million or $100 million is normal. Maybe in D&O, it may be more cases, but I've seen in cyber or professional indemnity, I've seen cases where even a largest of large.
Yeah, Arunachalam, can you please unmute? Yes.
I've seen cases where, especially in US and Europe, very largest of large corporates who are well endowed, deep pocketed, they have huge operations. They ended up with a $100 million cover when they had a legal challenge for $1 billion. At least I can mention about a large retail brand in US. They had a major cyber incident in which even now cases are going. They already spent about $400 million. They have spent only on cost and breach management. And they had a cyber insurance cover only for $100 million. $10 million, the lower layer, and stacked up to $100 million. So they are going to pay from their balance sheet. And their legal challenges are not over yet. All the legal cases have not still come. They have not been tried. They have not seen most of the awards. So what should not happen, what an Indian decision maker should not do, is end up with a very low value D&O cover.
Yeah, thanks. Useful. The next question is from Mr. Manvinder Singh. So, okay, so basically this is something you have to clarify first. So he's asking if a policy is taken from different insurers.
Yeah.
Would the first or prior insurer honor the claims arising out of X? So I think that you need to explain if that is possible.
Yeah, there is something called, one feature of the policy called, most of the Indian policies, what is called claims made. Claims made policy would require that at a time when you receive the legal notice, or on the day you receive an email from somebody challenging you, on the day it is you received by us and you're going to inform the insurer, you should have an insurance cover valid, it is current, it is available on the day the claim is made. Correct? So that's a claims made requirement. So as long as you have claims made policies taken at the time of legal claim coming, the policy will cover. Number one requirement. Number two requirement is, if there are any previous instances or any occurrences, you notify that to the insurer. He has taken note of something, maybe just a legal notice has come, but nothing happened, no case is filed. Or an email has come challenging the director, you have received it. When you go to an insurer for buying, especially the first time buyers, you must inform them that these are the legal challenges that have been received by us. We don't have a claim. We are not paid anything to anybody. These are the facts. If it is notified to the insurer, based on that, he decides whether to be your insurer at all. If he goes forward to become an insurer, he is going to honor any of that. The prior legal challenge not informed to the insurer will be a big problem. So to answer this question, you have a succession of claims made policies. The policy will trigger irrespective of whichever insurer is there. At the point of time when you receive a legal notice, the insurer who is your insurer at that time in that year is responsible for all the features of that policy. For whatever limits that you have purchased, that insurer will pay.
You are just a follow-up on my question, which you have very kindly answered, Mr. Arunachalam.
Yes, Mr. Singh.
This is Manvinder Singh. See,
Yeah.
my point is that let's say I'm in my 6th year of DNO policy. First
Right.
years was with Tata AIG, and now it is with IFCO Tokyo.
Right, sir.
Now, in the first year, there was some incident, the
Okay.
claim of which is received in the 6th year.
It is notified to you in the 6th year.
Yes, notified.
Okay.
The first notice to me about the claim or misdemeanor, or whichever way you may look at it,
Yeah.
is received in the 6th year.
Yeah.
Now, the first insurer is no longer with me. It's not been with me
Correct.
for 3 years. Now,
Correct.
which insurer is responsible? And my independent directors would want to draw a comfort that they have a continuous
Protection.
coverage. Yeah.
Right. So that's where we focus on this golden word called retroactive date, Mr. Manvendra Singh. You should see your retroactive date. Retroactive date, as I told you, is the first date of the first D&O policy that you took. So when you bought the policy in 2015, when let's say Tata AIG was the insurer, 2016 IFCO Tokyo, 2017 ICICI Lombard, like that, you are with a 6th different insurer on the year 6. But
Yes.
you are careful to maintain the retroactive date. Every policy maintains that the 1st January 2015 was the first date of my first policy. In 16, the policy should say retroactive date 1st January 2015. In 17, in 18, in 19, 2020 policy also should say retroactive date is 1/1/2015. If this is the case, your directors are very safe. Your insurer in year 6 will protect these directors. That policy will trigger. If you have failed to maintain retroactive date, then there's a problem.
Is retroactive date a default clause of the policy, or the insurer has to take care?
No, the insured and your broker have to take care, sir. Suppose I am your broker, let's say in the year 6 only. Let me say you change broker also.
Okay.
Then as a broker, as a responsible broker, I'm supposed to ask you, sir, which companies, which policies you had in the past? When did you buy D&O for the first time? What is the retroactive date? And what is the retroactive date in the just expiring policy? Is it 1/1/2015? Then it becomes the job of the broker to make sure in his underwriting submission, he will request the insurance company, please give coverage with retroactive date from 1/1/2015. And I would say in today's market, insurers are very happy to provide that, which means 5-year backdated retroactive date, they will provide in 2016, even if it's a new insurer. So you are having correctly informed and requested to insurer, the insurer carefully offering to cover the retroactive date, the insurer of year 6 will father that child, if I can use that word.
So my takeaway is, Mr. Arunachalam, that a policy should have been taken every year
Without
and
break.
B, without break, and in every interim policy, the retroactive date should have been mentioned.
Maintain, correct.
Okay. Thank you so much.
Welcome, sir.
Much appreciated.
Yeah.
Shantanu.
Thanks. The next question is from Mr. Sachin Vora. Why are we not seeing cases against companies like DHFL or ILFS or similar companies? If DNO covers this, then why is there no class action suit against them?
Okay, I will not discuss specific entities because I am not their advisor or broker. It's wrong for me to assume or speak anything, but in general, I can give a response. As I told you, when I open the newspaper every morning, whether it's a local broadsheet newspaper or a financial newspaper, all these cases are reported. And I can bet that most of these large entities would have a D&O cover already there. What is happening to a D&O policy, how that is triggered may not come into the media. Rarely so. I only seen discussions like the sexual harassment allegation and later conviction of an IT decision maker was reported in media. Even the D&O policy, how it responded, was also discussed in media. So usually these corporate events are discussed in media. They're reported, splashed every day, and the story is pursued and pursued and pursued. What may not come to your knowledge or my knowledge, it is never public domain that the prospects of the claim under the D&O policy may not be discussed in public. It may be for good reasons, it may be maintained confidential. The entity will not tell out what kind of policy they have. They're not supposed to tell out. The insurers don't discuss their customers' claims publicly because it's very sensitive, it's confidential, which is why if it spills into the public discussion here and there, you may get to know about it. By virtue of the incident being large, by virtue of the entity being large enough, well endowed, deep pocketed, mammoth in size, the corporate events are discussed. You should reasonably assume that there is a fat D&O cover available placed by a responsible broker that is already triggered, and the insurer is seized upon whether to admit the claim based on the issues, whether it's criminal in nature, is there civil indemnity to be provided, how much to be provided, is it to be provided less, what kind of lawyers are to be engaged, is it a lawyer engaged by the entity or is a lawyer engaged by the insurance company? All these decisions are taken. So I would tell you today, sir, large events may have an insurance policy. For example, I'm telling you, large pollution event and a fine being charged, maybe there is a liability policy already working on it. We may not get to know the exact details of it.
Yeah, thanks. Arunachalam, maybe the last two questions.
Yeah.
So this is a question of Akila. Taking policy outside India does not lead to FEMA violation, whether central government prior approval is required.
If you are an Indian entity only domiciled in India, usually no underwriter worldwide will give you cover. Usually not. We are not seen unless the product is not available in India. Suppose you're asking for an exotic product, for example, fine art insurance, or let's say reps and warranties insurance. You are selling your company. You are a seller. You want the warranties and indemnities to be covered. The sophistication of the product gives you justification for buying your policy outside India. It is permitted. There's no FEMA violation. Your insurance company will take care of it. They will make sure that the compliance is there. They will accept the premium. It can be placed abroad. So it's placed abroad in two ways. One is there is a fronting policy here supported by a reinsurance. You don't always end up buying the actual policy abroad. It is usually not done that way. The Indian entity, if it is domiciled in India, operating in India, wants a policy which is based on a product available outside India, usually has an entity, an insurance company in India fronting it. They will front it, say 99%. So there's no FEMA angle there.
Sir, what happens in case it's a group company? Like the Indian entity is a say 55% subsidiary of a group company which is domiciled outside India. The Indian entity's operation is in India and across the globe as well. Now the group entity insists that they need to hold the group policy because obviously because of the cost part of it, they are able to have a better cost for having the policy outside India. Now, the Indian entity used to have the D&O policy consistently in India, but now since the group is insisting, they are being forced to go to the group. But would we be violating the FEMA if we actually go along with the group?
See, there may be a FEMA requirement for the volume of the transaction. There may be a FEMA requirement. But fundamentally, just because an insurance requirement, there's no FEMA angle to it. If there's a volume, suppose FEMA says that above $250,000, you can't transfer money out, there may be a requirement of taking RBI approval.
Only to add to what Akila has said. Suppose you have a holdco in say Singapore, and you have multiple subsidiaries companies in India. Okay. Now, in such case, what happens in order to cover various subsidiary companies in India, holdco takes policy, let's say in Singapore, so that all subsidiary companies in India is covered by the holdco. Now, the issue and the challenge which is there is when the claim arises in India, foreign insurer is not able to remit the funds to India, to the directors, to defend the case or settle the claim. So that is basically a challenge which is happening. Taking insurance policy abroad is not a challenge. Challenge is how to get the funds back to India for settlement.
Correct, sir. These are challenges faced by multinationals worldwide. This is a frequently discussed topic. It depends on the insurance regulations. It depends on the foreign exchange regulations. It's also have a tax angle to it. That it may be taxed at the end of at the other end where the money is received. So these compliance requirements are there in every market. I would say that I would not like to comment on the FEMA compliance because I'm not an expert on FEMA. But I would like to say that if it's a Indian entity and the transaction we are talking about is a liability insurance policy, it is common that Indian subsidiaries of foreign parents are insured abroad. It is very common.
Mr. Arunachalam, I have one question. In case of a large projects, especially of real estate and some kind of a plant, like a refinery plant is being made, at time you appoint a lot of contractors, and their contractors employee and staff work on your site for 3 year, 2 year, kind of a long duration. So my question is, will DNO cover the agents and the employee of a subcontractor working for your projects as an officer, DNO cover?
By default, Rajesh, right?
Yeah.
Yes.
By default, the policy is to cover, as it was conceptualized, the policy is to cover directors and officers only, Rajesh. As I told you, some of the or any person who's got a managerial or supervisory role in the company, right? It is not expected to cover constituents other than this. But as the insurance market evolves, as there are insurers who are refining their products, I've seen at least 1 or 2 products where every employee of the company is covered, right? So I would, my response to this is, depending on the circumstances, depending on the requirements. For example, I know a private equity fund, which has got PE and VC kind of activities, they want to include even their advisory members. There is an advisory committee. The members are not directors on the board. They are not salaried employees. They work on some kind of a fee or commission or some kind of a remuneration basis. They are not employees. They get some kind of maybe they raise an invoice and they're paid. They're advisory members, board members. So the request from that entity is, we would like all these advisory members also to be protected under D&O. We spoke to the insurance company. They were happy to include them. So I would not be surprised if an insurance company says, we'll include the employees of our contractors also under D&O. There may be, because the insurance market is quite wide now. There are 38 insurers, as I told you, and more than half of them have a good D&O product. It depends on the underwriting consideration or underwriting appraisal of the insurer. I would not be like in a typical banker's blanket policy. The blanket policy also covers small micro agents who cover 2,000, 5,000 rupees from villages. They are not a bank employee. You know, today you have banking correspondents, BC. Banks include them, though they are not employees, they include them under their policies. Not a D&O policy, but the other policies. So as a matter of concept, it may be possible for an insurer to accept, but I wouldn't say all the insurers may accept. There may be an insurance company who will say, our policy will cover only directors, any officer, anybody with supervisory or managerial role, maybe up to employees. Anybody outside this definition, we can't cover. Maybe a stand taken by an underwriter. So it's up to the request placed before underwriter and how much they want to agree to it.
Right. Right. Another real life example, noted. A real life example I wanted to talk. There used to be there is a German joint venture company into India. Where both shareholders are owning are almost 50 or maybe 51, 49. and there has been some issues among the shareholders.
Yeah.
Some fight and other. Because of that, there are some legal cases, and one group, one shareholder ensure that there is a one case against few of the employee, and other group is ensuring that there is a case against the people belonging to other camp.
Yeah.
Okay. So kind of a scenario. So in that case, will a DNO cover, or DNO will take, okay, this is shareholders dispute, so we will not cover you.
So this is like a patient with multiple organ failure, right? This is like a patient going to hospital with multiple organ failure. You have complications already there. You have complications. There is a lot of confusion. So many people blaming each other, and they want to seek indemnity. I mentioned in one part of my presentation about major shareholder exclusion. If somebody is a majority shareholder in that particular D&O policy, the major shareholder exclusion specified the threshold limit as 15%. Anybody holding below 15% may file a case or may send a legal notice against the director. The policy will respond. It will protect the director.
Okay.
Suppose the person sending a notice is a, let's say, 30% shareholder. The policy says major shareholder exclusion 15%. The policy won't respond.
If the case is being done by minority shareholder,
the policy will respond.
Partner, okay.
It will respond.
So the shareholder which is owning highest will be excluded.
It is mentioned in the policy, Rajesh. It is mentioned in the policy under the major shareholder. There is a clause called major shareholder exclusion. The policy will say anybody holding shares above this cannot claim. Or if they may claim, they may end up claiming, this policy won't respond.
Well noted. Yeah. A DNO cover will work in case there is a political conspiracy, like there was some conspiracy by Chinese people against one of the plant of Vedanta, which has been coming in the news, that they ensure there are protests and other things. And as a part of conspiracy, many things are happening and getting it done.
See, conspiracy can be political, it can be personal. It may be a employee who didn't get a promotion, lady employee, suddenly raises an allegation of sexual harassment. That's also conspiracy against the director, correct? So irrespective of what kind of blame it is, what is required here is that person a director or officer or employee of the company, number one. Is there a D&O cover available? Is there a limit? Was that action or notice or email immediately conveyed to the insurance company? Was it notified? Then irrespective of what is the blame, the insurance company has to decide, oh, the claim is justified. The claimant is justified in seeking indemnity. Policy is there. Let us not fight in court. Let us agree for some settlement, mutually agreed settlement. That's one way of doing it. If it is only allegation, wrong charges, malified intention, all these conspiracies, the insurance company and the director will decide to fight against it.
Well noted.
Whether it is Chinese conspiracy or Italian conspiracy, doesn't matter.
Well noted.
Yeah.
Fine. Arunachalam, we'll just take the last question. And, we'll show out. So there is a question from Rachin Dal. His question is: the company already has a E&O, so errors and omission policy is already with the company.
Yeah.
Is it advisable to take a separate D&O policy also? So I think you mentioned this in one of your slides.
Yeah, all these liability policies are mutually exclusive. They don't address each other's requirements. A D&O policy cannot handle E&O requirement. E&O policy cannot handle public liability requirement. All these liability policies are there for a purpose which only that policy will address. So E&O will not replace a D&O. E&O policy is to pay compensation to a third party, which is your customer, for a defect in your service. You offered a service, you offered a particular activity for the customer, you charged a consideration, you are negligent, and there was a failure. There was a loss faced by your customer. He is filing it on you for professional negligence. That's what an E&O policy will pay. Whereas D&O policy, and that policy is to protect the entity. D&O policy, as I told, is for the director or officer. It is to face any blame or a legal charge or a challenge imposed on a director or officer, and to protect the dear and hope it answers.
Yeah, Arnachalam, I would now request, there are some unanswered questions, so I would request those who had asked the questions to just leave your contact details behind, email or number. We'll certainly get back to you offline and address those personally. So
Just to
details there.
Just to add a small point on the last question what was raised. Sir, in case there is a third-party liability insurance which you normally take, and you have also DNO. If those claim arises, it could be a third-party liability insurance directly on the company or directly on the directors. In settlement of claim, which policy will prevail, third-party or a DNO, and how you do it basically?
So when you say third-party liability claim, for what kind of incident? Who is agreed and what happened to
let's say real estate company constructing the property has taken a third-party liability. Something has happened on the site. Somebody has got accidentally injured or something has happened, which is a third party.
Third party is injured.
They also sued the director on the negligence and everything. Now, which policy will prevail?
There are cases where both policies will respond. I'll explain. The third-party liability insurance, usually called a public liability insurance, or a third-party liability section of a erection all risk policy or a CGL policy, which is to address this issue, is the right policy to pay the compensation for bodily injury and property damage. That is the right policy. If that policy is there for full measure, that policy will respond. But why I am saying D&O also will respond? Now the previous question was whether E&O and D&O are the same. They are not. Likewise, third-party liability, CGL policy and D&O, they are not. But a D&O policy will pay for defense cost. If the case comes on the company, the real estate company, asking for a compensation, the public liability or a third-party liability policy will pay, right? The same cause of action includes the director by name. D&O obviously has to trigger, but D&O policy will not pay the actual compensation. There's no way D&O will cover it. Usually what is called a BIPD exclusion, bodily injury, property damage exclusion is there in the policy, but it is possible to negotiate with the insurers and get a coverage for defense cost. So D&O policy will pay for the defense cost of the director. It won't pay for the compensation a director has to pay for the bodily injury or property damage. Hope that's clear.
Thank you.
Thank you. So thank you very much, everyone. So it's time for us now to end the session. Very useful session, Arnachalam. Very relevant examples and very well explained as usual. So the comments of participants also attest to that. So thank you very much for your time. Thank you all participants for coming together on this working day for about 1.5 hours, sparing you valuable time. And thank you very much to Blossom Advisors once again for their support in organizing this webinar. Next week, we have a session on debt markets, and we'll be sharing the details with you, on your respective emails. We look forward to your participation in that as well. Thank you very much, and good night.
Thanks so much to Way to Wealth and Blossom for giving the opportunity, and thanks to all the participants for the patient attention. It's a pleasure talking to you.
Thanks, Arnachalam ji. Fantastic. I think it was a great session. Thank you, sir.
Thank you so much, sir. Good night.